Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Rosario Ingargiola. He's the founder and CEO of Bosonic to discuss the role of technology for increasing scale of prime brokerage in digital assets. Rosario, it's great to have you back with us on Trade Talks. Welcome to the show.
Thanks for having us. Nice to see you, Jill.
And there's been lots of attention around prime brokerage. We have Coinbase acquiring Tagomi, Genesis acquires Custodian Bolt to launch prime brokerage. BitGo had an announcement. What is it with prime brokerage and digital assets? It seems to be this is the hot spot as we look for more institutional adoption.
Yeah, well, if you look at what the function that prime brokerage serves in traditional markets, it really helps to eliminate obviously risk, but also fragmentation across liquidity. So I think the markets on the crypto side, digital asset side, have just realized that this is a critical missing piece of the infrastructure. And so everybody's scrambling to deliver a service like that.
What's the most misunderstood aspect of prime brokerage? How does elimination of counterparty and settlement risk relate to prime brokerage and digital assets specifically?
Yeah, I think that's actually the biggest problem is that people don't understand that the main point of prime brokerage in a traditional market, my background's on the FX space, is really to eliminate trading counterparty and settlement risk. And they do that by basically being the central counterparty, which means is they're the guarantor of all of the trading activity, and they facilitate all the clearing and settlement. And so that's obviously problematic for some of the smaller companies that are trying to offer that kind of a service in the crypto space.
Yeah, and how does the balance sheet come into play for delivering prime brokerage and prime services like short borrowing, margin financing, and leverage? It seems to be short borrowing. It's almost a way to pay back in a way too. We're seeing that the interest rates are a little bit higher and they're paying back people who are putting their positions out there and available just like you would with traditional equities.
Yeah, that's right. I mean, those sorts of services, which are normally fall under prime services, with the short borrowing and margin financing, so people can trade on leverage, those are really important aspects of prime brokerage. But again, sort of ancillary. They're not. It's not really the primary objective. And so, balance sheet is obviously what drives all of those services. And so, if you look at custodianship in the crypto space, these are folks that don't really have client assets on their balance sheet. They're really directed custodians. And so they're limited to actual firm assets to provide those services. So there's, we're using technology to basically get around that and increase the scale of those sorts of things.
And that was exactly my question. What is the role of technology to increase the scale of prime brokerage and digital assets? Tell us a little bit more about that.
Yeah, I mean, what we're doing at Bosonic is we basically have a multi-custodial blockchain network. So clients hold assets in their own accounts at any custodian. They're then able to tokenize those assets onto those custodial ledgers. Those assets are then freely tradable with anybody else in the network with real-time clearing and settlement. So you get rid of all of that trading counterparty and settlement risk, and then that lays the foundation for actually institutionally crowdsourcing third-party balance sheet. In other words, aggregating third-party balance sheet in a frictionless way so that things like short borrowing can be facilitated in an integrated marketplace, and same thing with leverage financing as well. So you're not dependent then on the balance sheet of just one particular entity, but in fact, you open it up to a large swath of folks that know how to price those risks.
All right, and to wrap up here with what we're seeing with COVID-19, I feel as if people are getting more exposure to digital assets. They've had the time to study it and research it. Do you think that we will continue to see the growth that we've seen in digital assets, whether it's retail adoption or institutional adoption?
Yeah, definitely. I mean, if you look at Fidelity just did a survey where they surveyed almost 800 institutions, something like 80% of them saw the benefits of digital assets. It was interesting to note that the folks that have already invested under that report were really not really the traditional institutions we're used to thinking about, but more family offices, proprietary trading, and things like that. So there's a huge amount of capital still sitting on the sidelines. I think the macro environment is lending itself towards definitely a lot of adoption and a lot more upside for these assets.
All right, Rosario, great to have you with us as always. Thanks so much for joining.
Thank you, Jill.
And thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.